Yo guys, CFTC, welcome back to another video. Yeah, it's been a while since I released like a proper educational video and whatnot, but yeah, today gonna be basically breaking down a trade I just took like, I don't know, a lot of minutes ago on crude oil, right? The micro one. So yeah, ideally this one is mainly focused on the Q3 New York micro cycle delivery, meaning this one right here. As you can see, mainly we are reacting based off the previous cycle, right? The previous 90-minute cycle, and we're only trading within 22.5-minute cycles, right? And ideally, same thing every time, right? You want to see price go above the previous cycle high, which is this one right here, right? Even though there's no clear liquidity within this range right there, right? This is buy side. Let me remove everything, then just smug it out like this. Okay, then we'll say buy side liquidity, right? So that's our first buy side, right? Step one, price needs to sweep the previous cycle, right? Step two, price still needs to be above the, or basically needs to sweep the accumulation high, right? So we'll say price needs to sweep Q1 buy side, right? Okay, so additionally, we talk about a higher time frame period where they want to see price react off, meaning if price is going to be going lower from here after sweeping sell side, right? I mean buy side, if it's going to draw lower to sell side, right? It needs to be reacting off something, right? So in this case, right, we use something called time-based PDRAs, right? Pretty much introduced this to you guys via the quarterly theory concept a few months back, assuming that you've watched all the videos, right? But in simple terms, when we are trading within specific cycles, right, we refer back to the previous cycles, meaning we would come here to our indicator section and then click one of these two. Ideally, I would use this one because it's more stable, but this one, it just looks better. But this one just looks better, right? And then you'd have it on the chart like this, right? Okay, and then what do? We need to draw back. If we're trading within Q3, right? Q3 of Q3, we need to draw back to the previous cycle Q3, right? We can even go to the 15-minute time frame just for clear price, right? Then if we can zoom in and remove everything and just hide this, right? Let's also hide the executions. Okay, when we are trading within Q3, right, which is this range right here, meaning that we're looking to take shorts within this range, what do? We refer back to the previous cycle Q3, right? Okay, this is our dealing range, and the concept is initially very simple, right? What you do is you divide the previous cycle Q3 into quarters, not quarters, I mean into premium and discount, right? Into premium and discount. And what you specifically need, you want to see price drop off the equilibrium. That's what validates this range right here, this Q3. That's how you know that this Q3 is gonna hold, right? We're using basically this range right here, this Q3 range. So we can say like this, the Q3 time rebalance range. Spell that wrong. time rebalance range, right? Meaning we looking to see price rebalance the range or any PDRAs within it, right? You specifically do not need to go into deep details, right, to know that this area is going to hold, right? Unless you want to refine your trades and know where is price most likely to react off. So in simple terms, this range is a PDRA that's based on a range. It's a range bound PDRA, meaning if I'm to do it like this, price draws higher, right? Then it draws lower, right? Then we can say this range right here, when price was hovering within this range, right? This range is, let's say this range is Q2, right? And then we can increase this like this, right? Okay. For the next cycle or for future price, when price draws back into the range, right, we can anticipate price going lower, meaning we can anticipate price using this time range as a price or as a time range area in which price is going to react off to yield lower prices. But now the rules are the range needs to be the same, right? If this is Q2, this needs to be Q2. If this is Q3, this needs to be Q3. If it's Q1, it needs to be Q1. If it's Q4, it needs to be Q4, right? Hopefully that is making sense, right? That's initially how you even utilize your bias, meaning if price is not reacting off liquidity ranges, right, with inside time, right, it's gonna use time ranges to look for supporting factors. That's why at the same time, right, if you have a PDRA within it, for example, you have two fair value gaps. You have one that may have formed right here, right? Let's say this range is Q3, right? That we can remove this like this. You have a fair value gap that is formed within this range right there, right? Okay. Then you have another one within Q2 that is formed within the same area or just above the previous one, right? If this range right here, meaning this range right here from here to here, right? If this range is Q2 and this area is Q2, there's a 99.9% chance the price is gonna violate this fair value gap, draw to this one above, and then react off it, right? This is a time-based PDRA, right? This is a range-based PDRA, right? It's a full quarter, using quarters the same way we use PDRAs, right? Meaning you don't even need to be looking to see what PDRA is within the range, but there's generally gonna be a PDRA in usually your selected time frames, right? Okay, so hopefully that makes sense, and hopefully that translated pretty well, right? Okay, so if you go back into this range, right, price within Q3 draws higher, right, sweeping the previous cycle high. So if we enable this is the previous cycle, right, draws above it, right, and then it reacts off this time-based range. If you want to refine price or want to be more specific with it, right, what you can do is divide this range in half like this using the GAN box. This is my settings if you want to see them. Then we go to the 5-minute time frame, meaning ideally the quarters that you want to refer to, they need to be even quarters or close to even, right? Okay, so right now, knowing that we are within this range right here, right, we have price within this range. So if we drag this above like this too, right, this is Q3, this is Q3, price begins its distribution lower within Q2, right? What is it reacting off? an order block that formed within Q2 of the previous cycle, right? So you would ideally drag this range like this, right? And expect price not to even expect Q2, Q3 to not even go above Q2, right? And then you anticipate lower distribution within price, right? So now this is when you're utilizing time-based PDRAs, right? Now for the entries, right? It is exactly the same thing. So if I can go to the 1 minute time frame, right? Remember, we take our trades within Q3, right? Generally, you can also take within Q2, right? But ideally, if you want to take within Q2, just make sure that there's a high that was created within Q2 of Q2, meaning divide this range into quarters and then make sure the highest area within this range is Q2, right? So that's an early distribution, right? And then, yeah, how you can utilize your entries, right, without even looking or waiting for any forms of displacements, right? Usually they will be present, but they sometimes you're not going to see them until it's too late, right? The easiest way that I utilize time-based PDRAs to get in sync or to get high probability entries with little to no resistance, right, is I divide my previous quarters and the current one like this. Let's just make sure this aligns perfectly. Okay, so this would have to be here like this, then this like this, right? You're gonna get involved within this range, Q3, right? There's an entry right here, right? Majority of people, right, when they look at this, what they would say, or what would cause them to take a trade, right, if I am to hide everything here, is this fair value gap right here, right? That is valid too, right? But that's not the ones that jump into my head. Like the minute I'm looking at price and I want the highest probability entries with little to no resistance, is I'm referring back to the previous quarter cycles and looking for PDRAs within that range, right? Okay, so if I can do this, right, let's do this. Copy from this cycle right here. Okay, see where price reacts within Q1, right, of Q3, reacts within Q1, right? If I am to drag the previous cycle lower, like this, no, like this, and we do this, look at what's within the range. We have a CV, which equates to a bearish fair value gap, right? If I'm to hide all this, see, Q1, price draws back to the range within Q1, right? Reacts off Q1, then distributes lower, right? You can even continue and drag price like this. What else will you see? We have another PDRA right there. The price rebalances off it, so it's reacting off two PDRAs within the same range, within the same quarter range, if that makes sense, right? So ideally, that's what leads to you executing a trade. I just pretty much got my execution a bit later than what I would have liked, because it was way down here, right? Way down here within Q2, right? But hopefully this is all making sense, right? Everything is aligning. And if you found this video insightful, helpful, just be sure to hit me up on, just be sure to like the button. And if you got any questions, just be sure to hit me up on Twitter and everything. And by the way, the Discord is almost ready, so the private Discord is going to be available in just a few weeks, I'd say. And if you need the indicator, just be sure to hit me up on Twitter. It is still for sale, bit more refined, but yeah. Hopefully you enjoyed this video. Hopefully you found everything insightful, and yeah, hope everybody has a good day.